Assalamu alaikum dear students. The topic we are going to discuss today is cost volume profit analysis, right? The cost volume profit analysis is a very important topic of managerial accounting. When we talk about managerial accounting, we have to take decisions according to the information, right? So let's start our question number 1. Harrison Company's most recent income statement. Sales 8,000 units, total cost is 2,08,000 and the per unit cost is 26. Variable expenses 1,44,000 and the per unit cost is 18. Contribution margin 64,000 and the per unit cost is 8. Fixed expenses are 56,000 and the operating income is 8,000, right? So what we have required to do is to prepare a new contribution format income statement under each of the following conditions. Consider each case independently. There are 3 cases. We will consider each case independently, right? So in the case number 1, sales volume is increasing by 50 units, right? So in the original data there are 8,000 units, and in the case number 1 the company is increasing the total volume of units by 50, right? 8,000 plus 50, so what we get? 8,050, right? So there are 8,050 units, and the per unit cost of sales is 26. To calculate total sales, the formula is we have to multiply total units, which is 8050. It will be multiplied by 26, which is the per unit cost. So what we get? 2,09,300. Less variable expenses. Variable expenses per unit cost is 18. To calculate total variable expenses, we have to multiply the units, 8050 by 18, which is per unit cost of variable expenses. So what we get? 1,44,900. And the contribution margin per unit cost is 8. To calculate contribution margin per unit, we have to deduct variable expenses per unit by sales per unit cost. So we get 8, right? To calculate the total contribution margin, we have to deduct 1,44,900 from 2,09,300, right? So what we get? 64,400. This is our contribution margin in total. Now we have to deduct all the fixed expenses. Fixed expenses are 56,000, right? So when we deduct this 56,000 from 64,400, what we get? 8,400. So the net operating income is 8,400. We have completed our requirement number 1. Now moving towards requirement number 2. The sales volume declines by 50 units. The company has decided to decline their units by 50. The total units are 8,000 and 8,000 less 50. So what we get? 7950, right? So we have 7,950 units. And the per unit cost for sales will remain the same, which is 26 per unit. To calculate the total, we have to multiply total units 7950 by the per unit cost, which is 26. So what we get? 2,06,700. Right? Now we have to deduct variable expenses. Variable expenses per unit are 18, right? To calculate contribution margin per unit, we have to deduct variable expenses per unit by sales per unit. So what we get? 8, right? Right here we have to multiply the total units. Total units are 7950. It will be multiplied by 18 per unit to calculate the total variable expenses. So what we get? 1,43,100, right? Now we have to deduct this 1,43,100 from 2,06,700. So the contribution margin in total is 63,600, and the fixed expenses are 56,000. We have to deduct this fixed expenses from contribution margin. $56,000, right? Now we have to deduct this amount. So what we get? 7,600, right? So we have completed our requirement number 2 as well. The requirement number 3 is the sales volume is 7,000 units, right? According to the original data, there are 8,000 units, but we will consider the case number 3. The units are 7,000, right? So we have 7,000 units in total. 7,000, and the per unit cost for sales is 26. To calculate the total, 7,000 units will be multiplied by 26. So what we get? 1,82,000, right? Now we have to deduct variable expenses. Variable expenses per unit are 18. Now we will multiply 7,000 units by 18. So what we get? 1,26,000. So when we deduct this 1,26,000 from 182, so what we get? 56,000, right? This is our contribution margin. Now we have to deduct the fixed expenses. The fixed expenses are 56,000. fixed expenses are 56,000. When we deduct 56,000 from 56,000, so what we get? 0. So there will be no profit or loss. The company will earn 0 profit, right, and will not bear any loss, right? If the company is selling 7,000 units, they will earn 0 profit and they will not bear any loss, right? So the company has to take decision accordingly. Now moving towards question number 2. Last month, when Harrison Company sold 40,000 units, total sales were 3 lakh, total variable expenses were 2,40,000 and fixed expenses were 45,000, right? So the requirement number 1 is, what is the company's contribution margin ratio? Estimate the change in the company's net operating income if it were to increase its total sales by 1,500, right? This is the requirement number 2. First we have to solve the requirement number 1. We have to calculate contribution margin ratio, right? To calculate contribution margin ratio, we have to find out the value of contribution margin, right? So how to calculate contribution margin? Sales 3 lakh less variable expenses. Variable expenses are 240, 2,40,000, right? So when we deduct this 2,40,000 from 3 lakh, so what we get? 60,000. This is our contribution margin. So we have calculated the contribution margin. To calculate contribution margin ratio, we will apply this formula. Contribution margin ratio is equals to contribution margin 60,000, right? It will be divided by total sales. Total sales are 3 lakh, right? 60,000 divided by 3 lakh. So what we get? 0.2, right? Now we have to multiply this 0.2 by 100. So what we get? 20. The contribution margin ratio is 20%, right? So we have completed the requirement number 1. We have calculated the contribution margin ratio, right? Contribution margin ratio is 20%, right? Now moving towards requirement number 2. Estimate the change in company's net operating income if it were to increase its total sales by $1,500, right? We have to estimate the change in the company's net operating income if it were to increase its total sales by $1,500, right? A very simple formula will be applied here. Requirement number 2 $1,500 are increasing, right? $1,500, right? It will be multiplied by 20%, right? So the change in company's net operating income, if it were to increase its total sales by 1,500, is 300, right? If the company is increasing its total sales by 1,500, the change in company's net operating income is 300, right? Change in net operating income. Right? So I hope you will you are able to understand this question, and if you have any query regarding to this question or the question number 1, so feel free to ask in the comment section, right? So inshallah we'll meet you again in the next video. Until then, take care of yourself. Allah Hafiz.